Yo, my name is Sebastian. So have you ever wondered about your credit score or why they're important or what you could do to make your score go up or what can make it go down? If you don't know the answer to these questions, I'm glad you're here. But if you do, you should still watch this video because I'm 99.9% sure that you'll learn something new. Credit pretty much runs the world. So if you want to get a job, you want to buy a car, buy a house, rent an apartment, get insurance, someone will run your credit, and what they find will determine what kind of job you'll have, how much money you'll qualify for, what kind of rates you'll get, where you'll live, and what kind of car you'll drive. Your credit can even affect your kids. So if you don't have good credit, you probably can't buy or rent in a good school district. If they need a co-signer for student loans or to get their own car, they can't come to you. And if you're a businessman and trying to get a loan to get your business off the ground, a bad credit will make it hard to get approved. On the other hand, a good credit will help you save money over time and make your financial life easier. So you have more options on where to live, more chance of getting approved for all sorts of loans. You get better rates on these loans and on insurance. You have more leverage and more negotiating power. It's also easier to get approved for a higher limit on your credit cards. Even though you might not use it, but you'll be able to have $10,000, $20,000, $50,000 or more in credit available to you just in case life happens. So that's a great position to be in, and it makes you more confident. So what's a credit score? A credit score, or your FICO score, is a 3-digit number that gives you a snapshot of how well you've been keeping up with paying your debts. The score is designed to predict consumer behavior. So it could tell lenders if they can trust you or how much risk they're taking if they were to lend money to you. It evaluates your credit worthiness. Worthiness? Worthiness. 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 It ranges from 300 to 850, and the higher the score, the more you could be trusted to pay back your debts. There are 3 credit reporting agencies or 3 credit bureaus in the US. So that's Experian, TransUnion, and Equifax, and they report, update, and store consumers' credit history. When you hear reporting agency or credit bureau, that can make it seem like they have some government affiliation, but they don't. They're private companies, and they basically make money by selling our information that they get from all sorts of lenders, cable, utilities, and phone companies, and they sell it to banks, credit card companies, your employer, or even you, the consumer. So they literally make billions of dollars every year by selling our data without permission, and they've been doing that for decades. But I guess Facebook and Google are the problem, because these bureaus are different and information is not always shared to all 3. You get 3 different numbers from each, but all 3 scores are based on 5 main factors. Number 1, that's payment history. That accounts for 35% of your score, and it looks at if you pay your bills on time without ever being late. Being late just one time can decrease your score by 50 to 100 points. Other derogatory marks like account and collection, foreclosure, bankruptcy, tax lien will also drastically reduce your score. So never, never, never be late, and always, always, always pay on time, and your score will increase. Number 2, that's credit usage or credit utilization. So that accounts for 30% of your score, and it looks at the amount of credit you use versus the amount of credit available. So let's say that your credit card has a limit of $1,000. If you use $900 of that, then your credit usage is 90%. If you use $200 of that, then your credit usage is 20%. If you keep maxing out your card or have a high usage, you're seen as a risky borrower, because the more money you use, the less chances you have of paying that back, and that behavior will decrease your score. If you want your usage to positively affect your score, then you need to keep it under 30%. So whatever your credit limit is, divide that by 3, and that number is the maximum amount that you should use every month. So in our example of $1,000 credit limit, then you can't go over $300. So spend less than $300 every month and your credit usage will be under 30%, and that will help your score. These first two factors, so always paying on time and keeping your usage low, account for 65% of your score. So if you do these two alone, you could drastically increase your score in a relatively short time. Number 3, that's length of credit, and it accounts for 15% of your score. So the longer you have credit and it's in good standing, the more you could be trusted and the more that's gonna help your score. If you're fairly new to getting credit cards, you can still have a good credit score, but you won't have an excellent one like 800 or more. It takes 5+ years of history to get to that level. But one thing you could do there is be added as an authorized user on your parents' or family members' credit card that's in good standing and that they had for a long time. So that history will be added to yours and help the length of your credit and help increase your score. But obviously they have to trust you, and you have to make sure that that account has no derogatory marks and that the usage is pretty low, like maybe less than 15%. Number 4, that's type of credits or credit mix, and it accounts for 10% of your score. So there are two types of credit: revolving and installment. So revolving are debts like your regular credit cards or store credit cards. And installments are debts like all the loans that you have that you generally make a monthly fixed payment on, like a car payment, a mortgage, student loans, or a personal loan. So the scoring algorithm like to see that you have all sorts of different type of debt, all sorts of different type of loan and credit, and that you could keep up with all of them and that you could pay all of them on time. Number 5, that's new credit or credit inquiries, and it accounts for the last 10% of your score. And it looks at how many new accounts someone has or how many new accounts they applied for recently. So every time you apply for new credit or you inquire for new credit, the credit card companies or the banks inquire for your report so they can look at what type of risk they're taking. Then pulling your credit is called a hard inquiry, and that reduces your score by just a couple points. Now, if you keep applying for new credit in a short period of time, or you keep applying for credit and keep getting denied, that's seen as a high-risk behavior and a high-risk consumer. Why do you keep wanting more and more credit so fast? And why do you keep getting denied? So denials look bad on your report and they can stay there for up to 2 years. Now, does that mean that when you get approved for a card, then you should just stick to that one card? Nope, because having multiple cards have more weight on the other factors. More accounts show that you could manage all of them and still pay on time. More accounts increases your credit limit, so if you keep your spending the same, then your credit usage, your credit utilization will go way down. So people that have super high scores usually have dozens of credit cards. Now with that said, if you're looking to get the best terms and the best rates, you need a FICO score of above 740. So anything above 760 at that point is basically for show off. So there you have it. That's everything that you need to know about credit scores and how to improve yours in the next 9 to 12 months. Now, have you ever wondered why they don't teach that stuff in schools? I mean, it's not complicated and it's super easy to understand, and it's so crucial for everyone to know. So why? Just why? That's all I got for today. If you think this video was helpful, like, comment, share, and subscribe to my channel. Thank you guys so much for watching, and I'll see you next week. Blue, you want to say goodbye to the people? Come here, bud. Good boy. Peace.